Here is the rewritten script. I want you to play along with me for just a moment. I am going to read 3 brief sentences aloud. Simply listen. Do not stop to consider whether they sound suspicious. Just ask yourself whether any one of them resembles something you may have personally said to a bank teller at some point in your life. I would rather withdraw a bit less so it does not get noticed. My grandchild is in a tough spot and needs cash urgently. That is really not something I need to explain to you. If even one of those felt remotely familiar, please keep watching, because in 2026, any single one of those completely routine phrases can trigger a hold on your account before you have even walked back to your vehicle. Here is the part that genuinely catches people off guard. You did not do a single thing wrong by saying any of those things. They are not false statements. They are not illegal in any way. Most of them actually sound like exactly what a thoughtful, cautious person would say when trying to look after their own finances. And that is the precise reason this situation snares so many people who have followed every rule their entire lives. My name is Diane. I focus on banking regulations and the financial safeguards that exist specifically for Americans who are 60 and older. Join the channel membership for early access to every alert before it goes public. Link right below this video. Here is something else I would like to accomplish today. There is quite a bit circulating across the internet right now on this very subject. Some of it is accurate, and some of it has been stretched well beyond what the law actually says. Around the 9-minute point, I am going to address and correct one of the most widely repeated claims about this topic, because you deserve an honest picture rather than the most alarming version of it. Let us begin with the background that explains why this entire conversation even needs to happen. And honestly, once you hear this one number, everything else in this video will start to click into place far more easily. The regulation requiring banks to report cash transactions exceeding $10,000 was written in 1970. 1970. A single gallon of gasoline cost roughly 36 cents. A loaf of bread ran about 24 cents. A brand new automobile cost somewhere around $3,000. The median sale price of a home across America sat at approximately $23,000 total. $10,000 in 1970 was not a small or casual amount of money. It was a genuinely significant sum, exactly the kind of figure Congress was targeting as it moved through organized criminal networks. Adjusted for today's inflation, that same threshold would now sit closer to $80,000. Yet that number has never been revised, not even once across 56 years, which means a regulation designed to intercept criminal organizations back in 1970 is now applied in its entirely unchanged form to things like a roof replacement, a used vehicle purchase, or a single month of fees at an assisted living facility in 2026. That widening gap between what the rule was originally designed to catch and what it actually catches today is the precise space where everyday retirees keep getting swept up, not criminals, but retired educators, widowed spouses, individuals who spent their whole lives saving thoughtfully. And there is something important that deserves to be said plainly before we move any further. This situation hits retirees harder than nearly any other group of people. And it is not because you handle money carelessly. More often, the opposite is true. A great many of you were raised to handle cash responsibly, to help family members quietly when needed, and to keep your personal finances private out of basic decency. Those habits served you extraordinarily well for many decades. The problem today is that a monitoring framework built in 1970 now reads those same habits as potential warning signs. You are not being penalized for doing anything wrong. You are being caught inside a system that has simply never been updated to distinguish between being careful and being deceptive. Let us walk through all three sentences, and please stay with me because the third one is the one I most want to address directly. The first sentence, attempting to be thoughtful by staying beneath the reporting threshold. Here is the instinct that almost everyone experiences the first time they learn about the $10,000 rule. If a transaction above that figure gets reported, why not simply keep the deposit below it? That instinct actually has a formal name under federal law. It is called structuring. And here is the detail that consistently astonishes people the first time they hear it. It is against the law, even when every dollar involved is completely legitimate. Consider a retired handyman who spent the last several years taking small cash jobs around his neighborhood. Nothing hidden, nothing dishonest, just the way he has always operated. Over the course of several months, he accumulates roughly $11,000 stored in a coffee can in his garage. A friend suggests splitting it into two separate deposits so it will not attract any attention. He follows that advice and deposits $6,000 one week and $5,000 the following week. He has not done anything dishonest. Every dollar was earned through actual work he performed, and yet he has just committed the one act that federal law treats as more serious than the underlying transaction would have been. Or think about a widow consolidating two old certificates of deposit following her husband's passing. Two different banks, two CDs, both coming due in the same month. Rather than initiating one large single transfer, she moves the funds in smaller increments spread out across several weeks because one large lump transfer feels uncomfortable to her. That instinct, quiet, careful, entirely understandable, is precisely the behavioral pattern that federal monitoring software is built to detect and flag. The solution is almost embarrassingly straightforward. Simply deposit the entire amount in one transaction. The paperwork filed when a deposit reaches $10,000 is completely routine. Banks submit thousands of these reports each and every week for entirely ordinary reasons. It is not an accusation against you. It is not a blemish on your reputation. The only thing that transforms it into an actual problem is any attempt to work around it. Please continue watching, because the second sentence is the one that ends up penalizing people for using the exact same words a genuine scam victim would use, even when absolutely nothing fraudulent is taking place. The second sentence, using words that sound like a scam situation, even when nothing fraudulent is actually occurring. In 2018, Congress passed legislation known as the Senior Safe Act. It shields banks from legal liability when they report suspected financial exploitation of customers who are 65 and older. That protection fundamentally changes how banks behave. When reporting creates no legal risk for the bank, but remaining silent could bring regulatory consequences, banks report more frequently. They place more holds on accounts, especially those belonging to customers over 65. Here is what actually sets off those flags in everyday life. A grandfather genuinely needs to wire $5,000 to his grandson to help cover a real legal expense. There is nothing fabricated about the situation at all. He explains exactly that to the teller, word for word, completely truthfully. The wire gets placed on hold anyway. He spends an hour on the telephone proving something that was entirely accurate from the start. A retired individual sells an old coin collection to a buyer he connected with through an online marketplace. Completely lawful, completely ordinary. While depositing the payment he received, he mentions the words online and stranger to the teller simply because those words accurately described how the sale came together. A quiet notation gets added to his account file that he will never have the opportunity to read. A woman becomes interested in cryptocurrency after her granddaughter walks her through how it works. She decides to invest a modest amount through a regulated exchange. She mentions the word crypto while initiating the transfer, and the transfer is immediately placed on hold for review. Even though purchasing through a legitimate, fully regulated exchange does not violate any law whatsoever. Not one of these individuals did anything wrong. The system simply has no reliable way to distinguish between someone being exploited by a scam and someone living a completely normal life that happens to include a small number of commonly flagged words. The solution here is not to stay silent. It is to be straightforwardly honest in the most unremarkable way possible. This is a gift for a family member. This is a personal purchase I am making. True, brief, nothing elaborate attached, no explanation of where, who, or the specific circumstances, just the plain, simple reason. Now here is the 9-minute moment I mentioned earlier. Let us talk about what a significant number of people online consistently get wrong about that third sentence. The third sentence and what is genuinely accurate about it. You have likely come across videos claiming that if you simply decline to answer a bank's questions by saying something along the lines of "that is none of your concern," your account gets frozen instantly and automatically with no exceptions whatsoever. That claim is not entirely accurate, and I believe the truthful version is actually far more valuable for you to understand than the alarming one. Banks operate under what are commonly referred to as Know Your Customer rules. In simple terms, this means a bank must be able to account for unusual activity sitting in your file if a regulator were ever to review it. If you flatly decline to offer any explanation at all on a transaction the bank already views as unusual, that refusal can become one element a compliance officer considers when deciding whether to file a formal report. It is not an automatic trigger. It is not an instant freeze the moment those words leave your mouth. But it does eliminate the quickest and easiest path to resolving a question before it ever develops into something larger, which means the smartest approach is neither defending your right to privacy through complete silence, nor pouring out your entire life story to a young teller who is simply doing their job. It is one brief, truthful sentence. Personal household expenses, a repair on my home, 8 to 12 words at most. The compliance field gets filled in. The conversation wraps up naturally. Nothing escalates because nothing was left without a clear explanation. I want to walk you through a real case because none of what I am describing exists only in theory. A convenience store owner in North Carolina named Lyndon Millenny made regular cash deposits under $10,000 simply because that was the natural, organic rhythm of running a small business that dealt primarily in cash. In 2014, the federal government seized just over $17,000 directly from his bank account. He was never charged with any criminal offense. A nonprofit legal organization called the Institute for Justice agreed to represent him at no charge. It required considerable time, sustained public attention, and months of legal effort before his money was ultimately returned to him. He had not stolen a single dollar. He had not misled anyone. His pattern of deposit simply matched a profile the system had been built to flag, without any consideration of individual intent. Cases like his are precisely why this subject matters so deeply to people who have never violated a rule in their lives. The system does not evaluate your character before it evaluates your pattern. So let us turn all of this into something genuinely practical that you can put to use. Here is your single-page reference guide for 5 common situations. If you are making a large deposit, simply say, "I am depositing the full amount from," and then state the figure plainly. Do not mention anything about staying beneath any particular threshold. If you are making a large withdrawal, say, "This is for a home repair," or "This is for a personal purchase." Prepare one sentence in advance, practice it quietly in your car before you walk through the door. If you are wiring money to a family member, say, "This is a gift to my," and nothing beyond that is necessary. If you receive an unexpectedly large deposit, whether from an inheritance, an insurance settlement, or proceeds from selling an asset, Keep a brief written note for yourself. Record the date, the source, and one explanatory sentence. That note becomes your ready answer if anyone ever needs clarification down the road. And if a teller begins asking more questions than feels typical, respond briefly and without any tension. If things go further than seems appropriate, you are completely within your rights to politely request to speak with the branch manager. That request is legitimate, and making it does not generate the kind of flag that an outright refusal to respond can. Here is exactly what you should do beginning this week, starting today. First, write out your 3 sentences right now before you ever find yourself needing them under pressure. 1 for a deposit, 1 for a withdrawal, 1 for a wire transfer. Keep that piece of paper folded inside your wallet. Second, if you already know a large transaction is coming, whether it involves a property sale, an inheritance, a legal settlement, call your bank ahead of time and let them know it is coming. A transaction the bank has already been informed about almost never gets flagged or frozen. It is the unexpected surprise that activates the system far more reliably than the actual dollar amount does. Third, if you are ever subjected to an unusual volume of questions, remain composed. A single short sentence resolves the overwhelming majority of situations. If things go beyond that, request to speak with a manager rather than getting into a dispute with the teller. Fourth, if your account is ever placed on hold, visit the branch in person and bring your identification along with any relevant documentation you have on hand, a bill of sale, a letter from an estate attorney, any written record that provides context for the transaction. Documentation tends to resolve these situations far more efficiently than any phone conversation ever will. One final point before we close. Scammers are now contacting older adults by phone, impersonating bank fraud departments, and warning that an account has already been flagged and requires immediate verification over the phone. Some of these calls even replicate your bank's genuine phone number on your caller ID display. That call is never actually your bank. End the call and dial the number printed directly on the back of your own debit or credit card instead. Every single time, without exception. Has a bank teller ever asked you a question that seemed to come out of absolutely nowhere? What did you find yourself saying in response? I would genuinely enjoy hearing about it. Share it in the comments below. Join the channel membership for early access to every alert before it goes public. Link right below this video. Please share this with someone you care about who still handles most of their banking the traditional way, face-to-face, the way banking used to be done. Subscribe and turn on the notification bell. More investigations are on their way. I am Diane. The system has its rules. You deserve to understand exactly what they are. Please take good care of yourself.